Good evening. This is Ken Long from Tortoise Capital Management. This is August 5th, 2009. Here's a quick look at an intraday trade in the ReadyFireAim category that we use to feed the dog. Feeding the dog means that we take one of our intraday trades and use that to meet our daily trading objectives to make sure that we're getting paid every day. Right, this one is in an ETF. Symbol is FXP, and that's the an ETF that is double leveraged inverse China. So when China goes down 1%, FXP will generally go up about 2% intraday. Not a good one for long-term investing, but for intraday purposes, it's pretty good, pretty liquid. So this is a 5-minute chart. Now what I have in the yellow box right here is what happened after we exited. I want to just show the effect of the exit decision and put that into context. So this is RFA, Ready, Fire, Aim technique on 2009, August 5th. Symbol is FXP. You can see yesterday's pricing data. It closed down here around 9:35. There was a big gap up. This first green candle, the 5-minute candle, we call that the opening range 5 or OR5. We treat that as a yellow zone, that when price is inside there, there's indecision. But when it breaks out of that, we have a directional bias for the rest of the day. In this case, we saw a gap up, a little bit of strength, a sell-off, found support at a doji, and then strong buying interest as the broad markets around the world sold off sharply. So when the market is selling off sharply, then the inverse funds, especially the leveraged inverse funds like FXP, will do very well. So we placed our entry a nickel above the OR5 range and stop at the low of the big green candle here, and that gave us about a 10-cent trailing stop. It powered right on through, kept going up. At the yellow line in the normal way is where we went to no lose, so 15 minutes of open risk. And now once we go to no lose, we've raised the stop from this red line to the green line where we bought it. So the worst thing that's going to happen to us from this moment on is a scratch trade. FXP continued to march, had a little bit of selling here, a little hesitation, not enough to get us out. Kept going. It went up as high as 998, bounced, and then started selling off sharply. And at this point, we have almost 3R in hand, and a decision to cash it in at 994 at the red line and feed the dog or ring the bell. Now, for the rest of the trade, you can see over here, 994 is right about where the cursor is right now. It reversed after we sold it, went up a little bit further, another nickel or so, and then sold off. The rest of the day was actually a pretty long sell-off down to around the 980 level, although it remains interesting tomorrow. The point of this exercise was that we saw an opportunity, had a reason to get in early. With market weakness, we were anticipating that at some point, with the market strength in the last 18 days in a row being up, we figured at some point the thing's ready to go down. And so this may have been that opportunity. What we did was we took advantage of the first move, cashed our almost 3R, and put it in the bank. And then we were tactical traders for the rest of the day. So that's a quick look at Ready, Fire, Aim for August 5th in symbol FXP.